Welcome to today's deep dive. If you buy a coffee right now, the money disappears from your banking app instantly. But, behind the scenes, that coffee shop might not actually see your money for like 3 whole days.
Yeah, it's basically a total illusion.
Right. So today we're jumping right into a strategic brief on FedNow to figure out why the U.S. banking system is, well, basically stuck on a 1970s delay, and how the Federal Reserve is finally upgrading the speed of your money. Our mission is to unpack this massive modernization of the central bank payment rails.
And that delay you're talking about is all about how the legacy ACH system batches payments. I mean, think of it like waiting for a commuter bus.
Okay, a commuter bus.
Right. So the bus only leaves a few times a day.
Yeah.
And it actually waits until it's completely full of passengers or, batches of payments in this case, before it finally departs.
Which sounds incredibly inefficient. Like, using ACH today is honestly like expecting a text message, but being forced to wait for a carrier pigeon.
That is a perfect way to put it. Because for a small business, that wait creates massive working capital strain. And for everyday consumers, those settlement delays trigger literally billions in overdraft fees.
Wow. Billions. Which brings us to the core of this brief, right? The FedNow solution. The Federal Reserve is shifting us to a real-time gross settlement system.
Exactly. And the really key word to focus on there is gross.
Gross, as in not net.
Right, not net. In that old commuter bus system, banks basically tally up all the day's transactions and just settle the net difference at the very end of the day. But real-time gross settlement means every single transaction is settled individually.
So they are just firing them off one by one.
Yeah, it's like giving every single dollar its own dedicated teleportation pad. It leaves the second you hit send, 24/7, 365 days a year.
Okay, but wait. Looking at the global landscape, the U.S. has been severely behind here, right? I mean, Brazil has PIX, India has UPI.
We've been way behind, over a decade.
Yeah, so if this teleportation pad tech already exists globally, why hadn't the private sector in the U.S. just, built it themselves?
Well, they actually did try. There was a private sector alternative before FedNow called the RTP network. But the problem was really the underlying mechanics of its monopoly.
Monopoly? How so?
So RTP was built and controlled by the nation's massive money center banks. If you wanted to use it, smaller community banks and credit unions essentially had to route their customers' financial data through the servers of their biggest competitors.
Oh, wow. So smaller banks were effectively locked out unless they wanted to hand over their proprietary data to the Wall Street giants.
Exactly. And that is exactly why FedNow was so necessary to level the playing field. It basically acts as a neutral referee.
Right, providing a public rail.
Yeah, a public rail with universal access to over 9,000 financial institutions. That means your local credit union gets the exact same real-time clearing capabilities as a massive global bank.
But wait, if universal access for banks is the actual goal here, doesn't the Fed already have a direct line to these banks through FedWire? Like, how is this different from FedWire?
That's a really great question. They do, but FedWire is essentially a heavy-duty freight train. It's built for high-value, wholesale interbank settlements.
Okay, so massive corporate movements.
Right. There's no dollar limit on a FedWire transfer, but it only runs during business hours. It completely shuts down on weekends and holidays.
And FedNow?
FedNow is entirely different. It defaults to a $500,000 limit, never sleeps, and is engineered specifically for retail, commercial, and gig economy microtransactions.
Okay, so moving from freight trains to instant microtransactions. And the brief also notes this is built on something called the ISO 2022 messaging standard.
Yes, and this is actually the hidden data upgrade of the whole system.
Hidden how?
Well, right now a payment and the actual reason for the payment often travel completely separately. But ISO 2022 allows rich, structured data to travel firmly attached to the money.
So you mean like an invoice could just be baked into the payment itself?
Exactly. A complete itemized invoice sits right inside the payment message.
Oh, that's huge. But hold on. If the money and the rich data are moving instantly, we don't have that 3-day commuter bus window anymore.
No, you definitely do not.
So you can't just call the bank tomorrow to stop a bad check that hasn't cleared yet. I mean, the risk vector must completely flip, right? Instant speed has to mean instant risk.
That is the most vital takeaway for risk management in this entire brief. The headache shifts entirely from credit liquidity drag, just waiting for funds to clear, to real-time fraud velocity.
Because once it's gone, it's just gone.
Right. Settlement is irrevocable and instant. So the security has to happen in the literal milliseconds before the transaction actually clears.
Wow. So banks are forced to deploy what, sub-second AI-driven transaction monitoring just to protect those outflows?
They have to, yes.
Yeah.
Security has to be exactly as fast as the payment itself.
That is wild. But, for you listening, as the end consumer, the upside here seems absolutely massive.
Oh, it fundamentally changes your relationship with your own income. This infrastructure is exactly what unlocks embedded finance and instant earned wage access.
Earned wage access, so literally getting paid instantly.
Exactly. You clock out of a shift, and the money hits your account that exact minute.
Okay.
I mean, no more waiting for a bi-weekly payroll cycle to finish up.
That is a total upgrade to the plumbing of the entire economy.
Well, we need to wrap up, but I want to leave you with this final provocative thought to explore on your own.
Go for it.
If your money now moves at the exact speed of data, 24/7, 365 days a year, how will this instant liquidity permanently alter your own consumer spending psychology? Like, when you never actually have to wait for a payment to clear, what happens to our traditional concept of a bank balance?